Hi and welcome once again to our accounting classroom. We are looking at the topic of process costing, and we will be looking at an example question where we'll be examining how to prepare a process cost account if a company adopts a first in first out method cost of valuing their inventory. And our example question that we'll be looking at today is called We Do It Right. So let's look at this question and see how we will go about looking at preparing the process cost account using a first in first out cost system. So the question states, We Do It Right Incorporated manufactures a standard product which is completed in two processes. The company has provided the following information relating to process 2 for the month of May 2008. Number 1, on May 1st, 2008, 450 units were in stock with costs incurred to date as follows. So they're starting the beginning of the month with 450 units. So since they're starting with 450 units, we can state that this is our opening inventory. And these costs that they have incurred so far is as follows. Materials from process 1, because remember they're saying that they're talking about process 2. So the materials from process 1, the cost of those materials is $2,025. The materials that were added in process 2 cost $1,395 and conversion cost was $1,350. Now remember we stated that conversion cost is a combination of our labor expenses and production overhead. Now, if you don't have any expenses, then the conversion cost will be just labor and production overhead. It states that these units, which we are referring to the 450 units, these units were 100% complete with respect to process 1 material. So they were 100% complete with process 1 material. What does that mean? It means that these 450 units don't need any more materials for process 1. Okay? And they stated and 60% complete with respect to added materials. So the additional materials, they're just 60% complete. So what we need to look at, because remember in the first in first out method, the units that were started previously must be completed first. So since these 450 units were already 60% complete with respect to added material, what we need to find out is how much added material they still need to complete these 450 units. So remember, when you're talking about percentage, it's out of 100. So 60 out of the 100 is already completed. So it means that these 450 units need an additional 40% of added materials to be completed. So is that 40% that we're going to use to help us calculate equivalent units when we do our equivalent unit table. It says, in addition, they also require 10% of labor and 10% of production overhead to be completed. So these 450 units need an additional 10% labor and 10% production overhead. In other words, they are already 90% complete in terms of labor. They're already having 90% of the labor and the production overhead. So they just need an additional 10% of the labor and the production overhead to be completed. Note number 2 states, During May 2008, 2,750 units were transferred from process 1 at a valuation of $12,460. So they transferred 2,750 units from process 1 to process 2. Okay? And that valuation was $12,460. They stated that the added material costing, $3,003 were used, and labor costing, $5,980 was incurred during the month. Production overhead amounted to $2,108 were also absorbed during this process. So they're looking at the cost of the 2,750 units that were moved from process 1 into process 2, because remember we stated that you have to value the inventory at each stage, and these are the cost elements in these 2,750 units that were in process 1. So output in process 1 is now input in process 2. Note number 3 states, on May 31st, 2008, the company still have 400 units which contain 100% of process 1 material. So at the end of the month, they had 400 units, which meaning that these are your closing inventory units. And these 400 units having 100% of process 1 material. So they are completed with 100% of process 1 material and 50% of added material. And then they state, however, these units still need 40% of labor and production overhead to be completed. So here, when you look at the beginning, when you look at opening inventory, when they tell you that they were 60% completed and they also required 10%, with the opening inventory units, right, the 450 units at the beginning, what you're looking at is how much more, or the degree or the percentage of materials, labor, production overhead that is still needed to complete these 450 units. So we look at what is still required in order to help us calculate our equivalent units. However, when we come to closing inventory here at the end, the 400 units here, in calculating our equivalent units, we are not looking at what still needs to be done. We look at what has already been done, what has already been completed, the degree or the percentage of completion with respect to materials, labor, and production overhead with these 400 units. So here at the beginning, the 450 units still need 40% of added material and still need 10% of labor and production overhead. However, at the end now, the 400 units are 100% complete with respect to process 1 material, and they're also 50% complete with respect to added material. And then they say they still need an additional 40% of labor and production overhead to be completed. So in other words, there are 60% complete with respect to labor and production overhead. So what is required from this question? The question is asking that we prepare the process 2 account for the company if it adopts the first in, first out FIFO costing system. Okay, so in our example and our demonstration today, we are going to be looking at how to prepare this process to account. And in preparing this process to account, we have to go through some steps that were outlined in our introductory video when we talk about process costing. So let's go over to our spreadsheet. I've already started the spreadsheet a certain way, and it says we do it right. We are using the FIFO method of the valuation of inventory. Now, our first step, we are looking at calculating equivalent units of the various cost elements using the equivalent unit table. Now, how would you know what to put in the table in terms of the cost elements? To know what to put in the table with respect to the cost elements, you look at the question, because here they talk about process one, material. They talk about added materials. They talk about labor and production overhead. So therefore, our elements that we are using in this question would be process one, material, cost elements, process one, material, added material, labor, and production overhead. Remember, we can also say conversion costs here because labor and production overhead combined is our conversion cost. So we had set up with details, raw materials, the percentage that is needed, or percent that's already complete depending on what is in my details. Equivalent units for process one, and you do the same thing for added materials. So you have the percentage, equivalent units, the labor, you have percentage and equivalent units, and for production overhead, you have the same percentage and equivalent units, because we want to calculate equivalent units for our opening inventory, our fully completed units, and our closing inventory. Now, another thing that you need to look at is also the calculation of the units of output from the process. How do we calculate output units? And I already have some information here set up for you. To calculate output units, we have two formulas that we can go by. The first one, to calculate your output units, you can use your opening inventory units, add your input units, and subtract your closing inventory units. Now, this is if this information is available to you. If in the question you are given opening inventory units, input units, and closing inventory units, you can use all three of those figures to work out what your output units will be. So in this case, we have opener is 450, we have input is 2750, and closing is 400. The other way that you can calculate your output units, if you are not given the elements that I just outlined in my first formula here, the other way you can calculate it is by taking your opening inventory units and just adding your fully completed units. So if you don't have input units or closing inventory units, and you know your opening and your fully completed, you can use those two figures to calculate your output unit. The other thing that we want to talk about, because I'm talking about here about calculating fully completed units, but how do we calculate fully completed units as well? Now, there are two formulas that we can use to calculate our fully completed units. You can calculate fully completed units by taking your input units, if they are given to you, and subtracting your closing inventory units, if that is given as well. Now, if you don't have that information, you can also calculate your fully completed units using this other formula here. Your output units minus your opening inventory units. So here I have given you two formulas that to calculate fully completed units, and two formulas to calculate output units. Now, when we come back in our next video, we are going to be looking at calculating the equivalent units of the cost elements using this equivalent units table here. So thank you for watching. Like and subscribe to this video, and we will talk about equivalent units